Hi there.
Morning.
Hello. I want to welcome everyone to the 3 tax saving secrets every company should know about. My name is Jennifer Mays and want to welcome everyone. Maybe we'll give one more minute for people to join. But just want to thank you again for taking time out of your day to spend with us on this very important topic about tax incentives and credits for businesses. Our goal today is to highlight how we can help take some of the guesswork as it relates to tax incentives. So how do we know we're in the right spot? If you fail to understand and take advantage of tax credit and incentive opportunities for your business, do you have concerns of whether your CPA is giving you the latest insights that have huge benefits to your company? And have you ever felt like the tax code is just too complex to figure it out all on your own? We have really one simple goal today. Well, 2 simple goals, actually. We always want to help companies save money on taxes. Our commitment is to find ways to save $1 million+ over the lifetime of our partnership together. And in order to achieve that goal and ensure that you're receiving the latest insights and tax savings ideas is by really utilizing a team of experts like Hito LLC. And finally, during our time together, you're going to see real life examples and how we work with companies similar to yours. And we're going to show you real savings that we have achieved for them this year by utilizing the team approach to tax incentives and credits. So thanks again, everybody, for coming today.
Yeah, thank you, Jennifer, and thank you so much for everybody coming today. And my name is Yuko Tsuchida. I'm a founder and managing director of Hito LLC. I started my career with one of Big Four accounting firm, KPMG. And after leaving KPMG, I started my first CPA firm in 2008, where I had successful exit in 2016. And I've been specializing in tax credit and incentive past 15 years. And today I wanted to share my story, how we started Hito and how we came up with our proven process. So just a little bit background on me. Whenever I was little, I loved math and even competed in ABCAS competition. And I also grew up in a family business where I witnessed my parents struggle as a small business owner. So at young age, like whenever I was 14, I decided that I wanted to become an accountant to help business owner like my parents. And fast forward a few years, I started my career with Big Four accounting firm, preparing tax return for multinational companies. And it was a great experience and very rewarding, but I didn't feel like I was helping business owner like my parents. And during my time in Big Four, I discovered tax credit, tax incentive, and I was fascinated by how large companies utilize these credits and incentive to grow and scale their companies. So my goal was I wanted to help small to business size business take advantage of these tax credit incentive where large companies are already taking advantage of. So I was working 12, 15 hours a day trying to master all tax credits, but I couldn't do it myself, nor I had a structure to understand fast changing business for our client so that we can proactively identify opportunity. So I felt kind of like bad for like my clients. So one day I was having dinner with my friend who has a manufacturing company here in Southern California. He was telling me how happy he is with his current CPA, but he felt there's something missing. And he didn't understand what I was doing. So I was explaining to him, we specialize in tax credit incentive, meaning that we help company optimize taxes. And he wanted to explore working with us. That taxable year, we were able to save his company $500,000. He was very happy so that he introduced us to his CPA so that we can create better tax planning strategy in the future. As a team, we were able to identify both look back and future opportunity for the company, which saved them thousands of dollars to reinvest in their business. And his CPA saw the benefit of working with us, so that he introduced us to some of his clients in different industry, like manufacturing, high tech, hospitality. As a team, we were able to save them thousands, if not millions of dollars in tax. It's been very successful to partner with like trusted advisors like CPA, in addition to our clients, to create success team around them to maximize value. And this is how Hito was born. And I wanted to share how we can help you today. So how does this webinar apply to you? So if you're a manufacturer, SaaS or high-tech or hospitality company, and if you're only working with a tax preparer, or if you're working with just one R&D tax credit advisor, or if you do not yet to have tax education you need, this webinar might be for you. So over 15 years, our team has saved more than $100 million in taxes. For 2021, we have saved over $8 million for our clients so far. So today we will cover 3 secrets every company needs to know so that you can optimize your taxes. Number 1, the number 1 mistakes business make that cost them money. And 2, the number 1 reason why your current CPA or tax preparer may not be aware of all the tax credits. And then lastly, number 1 fastest way to business to maximize their tax credits. So number 1, the number 1 mistake business make that cost them most money. So from my experience, many small to mid-sized business solely rely on their CPA to be aware of all tax updates. But many tax practitioners, including myself, often specialize in one practice area. So it's important to have a team of experts to optimize taxes. Therefore, comprehensive tax planning is often done by a team and not one person. So here are some fun facts. So US tax code has 3.7 million words with 9,800 code sections. In addition, each state and local jurisdiction have their own sets of rules. Moreover, laws and regulations have updates and changes all the time. So here's some example, I can give it to you. So you probably know employee retention tax credit. It came out from CARES Act during COVID. This bill was passed originally in March 2020. And since then, there have been 5 updates within less than 2 years. And the most recent development was this Monday, November the 15th. As the infrastructure bill was passed and signed by President, which retroactively eliminated ERC as of September 30th, 2021. So you can see it is a lot of work to keep up with all tax updates. So I still get asked by my friends and many clients, why do you need more than one CPA or accountants? So I like to give an analogy of doctor. So if you're sick, you go to see your family doctors. And when you have a pain in the chest, your family doctor will say, you need to go see cardiologist. And when you have a freckle, you go see dermatologist. And when you have a baby, you probably go see your pediatrician. You don't expect your family doctor to be specialist in all areas. And like medicine, taxes are so complex. If you want to optimize your taxes, it's best practice to have a team of specialists around you. So this article discusses how complex US tax systems are. So let me share a real life example. So we have a client who is a landscape architecture company here in Southern California. They're a small company with less than $3 million in annual revenue and have 17 full-time employees, and they were affected by COVID. So they have 3 business lines, including landscape architecture designing, construction, and resale of patio furniture and fixtures. And during COVID, many construction sites were delayed or abandoned since they couldn't get supplies or had to comply with governmental guidelines. And the company was suffering on a cash flow and wondering how to sustain the operation if COVID restriction prolonged. So the challenge they were having, the company was working closely with local CPA firm who has been their family CPA for many, many years. And the local CPA has reviewed food tax credit programs that may benefit the clients. But he wasn't familiar with credit incentive and wasn't even sure the client even qualifies. So they reached out to us. So once we were engaged with the client, we had an onboarding process to find out how to better help them. So we started with reviewing company facts, including what happened, what's happening, and what's going to happen to identify all type of tax credits. So from our meeting, we determined a few tax credits, and we prioritized the employee retention tax credit, which will provide immediate cash saving for the client. So what that ERC is, any company affected by COVID-19 may qualify up to $26,000 refundable tax credit per employee. And they weren't sure the company would qualify since they were essential business and received PPP. With the update in December 2020, PPP recipient now can qualify for ERC. Also, with the additional guidance from the IRS, essential business may qualify for ERC as well. So after reviewing the facts and circumstances, we were able to qualify using both gross receipt test and shutdown rule, which resulted in $436,000 of tax credits. So second priority was to implement R&D tax credit we identified during the discovery phase. So the company is developing and improving product and process utilizing hard science, which qualify for the credit. After reviewing the R&D activities and interviewing all employees who are involved in those activities, we were able to calculate $80,000 credit for 2020. So combination of understanding company facts from clients, understanding numbers and tax position from their CPA, and our expertise, we were able to help save $452,000 for the initial year we are working together. Just to know, as long as the company continue to develop and product process, the R&D tax credit is annually available for our clients. So as you can see, this is like, team effort and not just one person's job. So it is important to have a team of advisors around you if you want to maximize tax savings. So that's secret number two, the number one reason why your current CPA or tax preparer may not be aware of all tax credits. So if you're solely relying on traditional CPA who doesn't specialize in credit incentive, you may be leaving money on the table. We as an accountant, including myself, are trained to typically look back what happened and identify what we need to do. But to optimize tax credits, company must look back as well as look in the future to identify and capture all credits and incentive opportunities. So US taxes are known to be very complex, and taxpayers spend billions of hours annually to comply with laws and regulations. Even you make sure you have done everything you can, but if you audited, almost 90% of audits results in some type of changes. So here is another example for this year. So the client is a destination and event management company. And what that means is that they help organize destination events and trade shows for companies from accommodation to catering to activities. And they're headquartered in Southern California, but operates in major cities throughout US. And this is a group company, and they have 6 entities which are owned by holding companies. And at the end of 2019, the group company had 160 employees with less than $5 million in revenue. So as you can imagine, this industry, this company was heavily affected by COVID-19. Their events were canceled and all that stuff. And they were able to sustain some employee and operation utilizing PPP loans, but needed to determine how to sustain the operation in the long run. The CPA and fractional CFO took a look and thought this company won't qualify for ERC. The reason was they had more than 100 employees. So they had approached us to take a second look and make sure whether or not company qualified for ERC and not missing opportunity for them. As we were engaged, we had an onboarding call with the client CPA, fractional CFO to review laws and regulation. And we reviewed the rule changed in December 2020, allowing the PPP recipient to take ERC. And we also went through the company facts and their operations. So first, we reviewed the ownership structure to ensure whether we need to group these 6 companies together or separately for ERC purposes. And based on the ownership, we determined these group companies must be considered as one company instead of 6 separate companies. And second, we looked at employee count for 2019 to see if they even qualify as a small business. Although they had 160 employees, after reviewing and converting them to full-time equivalent employees, they only had 75 full-time equivalent employees during 2019. So they qualify as small businesses. Finally, we took a look at gross receipt test and also shutdown rule to make sure which quarter would qualify. As a result, we were able to produce $925,000 total credit for ERC for this company. So once we are completed the ERC project, we have introduced quarterly business review to understand the business and its changes. So we discussed their past, current, and future activity to understand and potentially identify additional credits and incentive opportunity for them to pursue. Once we had array of program they may qualify, we as a group determine our priority to implement. And currently we are reviewing and implementing work opportunity tax credits and state level tax credits. So our result today is $925,000 in employee retention tax credits. So as to help maximize credits and incentive opportunity, we must create a partnership with clients and their accountants and other advisors. And it is so important that clients share the business plans and their accountant to share numbers and their CPA to fill us in on tax posture so that we as a team can create best tax savings plans for them. So credit and incentive are really a team effort, not just one person's job. So secret number 3, number 1 fastest way for business to maximize their tax savings. So as you saw before, there are continuous updates in law and regulation, and it is difficult for one person to keep track of and be knowledgeable about all tax changes. So to keep up with tax credit incentive requires a team, and also your business are changing every day as well. So having advisors who can regularly keep you updated and really understand where your business is key to maximize tax savings. So many types of credits and incentives are available on federal and state level, and some are industry specific. So this is very small and you cannot probably see, but this is a 2007 study showed $32 billion federal tax credits were taken by various industries. And here are top industries who are benefiting from tax credit. So manufacturing is the largest industry with $7.3 billion credit, followed by information or high-tech industry, $3.2 billion. So let me go through another example from this year. So this company owns 14 restaurants throughout America with about 300 employees. And they received 2 rounds of PPP loan, and some of the restaurants were largely impacted by COVID. So they originally didn't think they could qualify for ERC or employee retention tax credit since they had more than 300 employees and also received PPP. And their CPA wasn't familiar with tax credit incentive and wanted to second opinion to ensure his clients were missing out on opportunities. So they contacted us. So as we got engaged, we had onboarding meeting to go through law and regulation with clients and their CPA so that they can educate us what we need to know. So also during that meeting, we reviewed the company facts for ERC. First, we review ownership structure to determine whether these 14 companies must be considered to single entity or separate entities. And we determined these 14 companies needs to be analyzed separately because they were not owned by more than one person. So therefore, we reviewed employee counts for each entity to determine whether they qualify for small business, and all restaurants qualify for small businesses. Then we reviewed gross receipt test and shutdown rule to determine which quarters they qualify for credits, which resulted in over $1.8 million of credits for 2020 and 2021. So once we completed the ERC project, we introduced the quality business review, where we review company facts, including past, current, and future activity to identify area of credit they may qualify. As a team, we prioritize these credits to implement. So we are currently working on computing FICA tip credits and work opportunity tax credits. So as of today, we have produced over $1.8 million in tax credits. So having the quality meeting as a group to understand what's happening in the business and taxation, we will continue to identify and or to implement additional tax saving opportunity for them. Again, to optimize tax saving through credits and incentive or team efforts, we must understand business activities as plans, as well as financial and tax situation to proactively identify opportunity to save taxes. So our company goal is to save more than $1 million during our partnership. So just to summarize, To optimize tax credit incentive, it's important to have a partnership with you, your accountants and CPA, and us so that we can align ourselves based on the business situation and tax position so that you can create best tax savings plan for you. So moreover, many states are moving forward, negotiate and pre-approval tax credit and incentives. So to maximize your credit incentive, we must know your future plan and growth plan to identify these opportunities before you make investment. So we find that it's important to have a quarterly meeting to discover and understand your operation so that we can identify additional opportunities. So I wanted to share the tax savings and incentive assessment we put together. So many people are very skeptical about working with new CPA. So we wanted to make sure it's easy for you and your CPA so that you can see whether you can qualify for credit and find out how we can work together. And once you fill out the questionnaire, we can discuss whether you can qualify for any credits opportunity while you're focusing on your business. So here's what you receive from filling out the questionnaire. So if we perform assessment on an hourly basis, it's typically costs about $2,500. Obviously, we are not going to charge you like $2,500. But if we did charge you $2,500 and all it did was to find opportunity to save you hundreds, not thousands of dollars in taxes, would it be worth to you? So if you're interested in receiving complimentary assessment, please scan the QR code and find out the questionnaire. And we will contact you after we review your facts and provide you a feedback. I really appreciate listening to today's webinar. I hope this was informative for you. And again, thank you for joining us.
Yuko, do you want to take any questions here at the end?
Sure.
Hi there. I missed the beginning. My name is Scott. Thank you, Yuko. I have a digital marketing agency with about 40 employees. Do you, does it all work for digital marketing agencies? And am I big enough to be able to benefit from something like that?
It depends. Yes, I need to know a little bit more facts and circumstance, but yeah, you could qualify for some type of credits.
So just fill out this form and then it goes to you and we have a call. Okay. Thank you.
Can you put the form back up, please? So that we can scan it.
If you don't want to fill out the questionnaire and just want to have take a look at our website, you can go straight to there as well.
Excellent presentation, Yuko.
Thank you. Good to see you, Div.
Yeah, I would like to schedule a follow-up call with you. So
Perfect.
if you have 30 seconds, just can you tell me what's the difference between the ERC versus the PPP here? Just briefly.
Yes. So PPP was a loan given by government, right? And ERC is tax credit, refundable tax credits. And they were like originally PPP recipient couldn't also get ERC. Having said that, December 2020, there was changes. So even you receive PPP, you may qualify for ERC.
And it's not too late to apply for that?
Yeah, because it's a tax credit, you have a 3 years statute of limitation to go back and file it. So unfortunately, it was eliminated in September 30th, 2021, retroactively, but you can still file amended return to request refunds.
So you had to amend it previous year stuff.
Yeah.
Got it. Okay.
And then this is not for income tax, by the way, it's payroll taxes.
Payroll taxes, right? Got it. Okay. And it is I mean, we were late for the PPP second loan and all that kind of stuff. So it's too late for all that, right? It's just over.
PPP is closed, I believe, but ERC, you can still file for that.
Okay. All right, sounds good. We'll follow up later. Yeah.
Awesome.
Hey, Yuko.
Hi.
Hey, so my question is, you had mentioned there's some kind of test for the ERC tax credit for a company to qualify. If gross revenue or gross receipts for the year 2020 as compared to 2019 did not decline, or there was no significant decline, does that mean we will not be qualified for ERC tax credits?
So if you didn't qualify for gross receipt test, you may want to take a look at like shutdown rule. So what the IRS said was like, if more than 10% of your business was affected by governmental shutdown, you may qualify for credit. So Angela, like what industry are you in?
So I actually own a home health and hospice company. So basically my operations continued. However, I spent maybe 20-30% more on PPE, on gloves, and I had to buy thousands of dollars in rapid tests. So I spent a lot, and all my employees were still on payroll. I had to pay a lot of hero pay, a lot of premium pay, COVID pay, everything. So I'm just curious if I would even qualify.
Yeah, home healthcare, like we need to look much closer look at it and to determine like, whether or not like your more than 10% of your operation was like, affected by shutdown rule. Like as an example, we have a chiropractor, like, clients, and they were affected by like, their operation continued, but their operation was affected by COVID shutdown and like, CDC guideline, because they had to implement additional cleaning, which took like every like, 15 or 20 minutes. So whenever we looked at how many clients they were able to see prior to COVID and after COVID, there was about 20-30% reduction. So we were able to like qualify them using shutdown rule. So we need to really like look at like, what is your operation before COVID and after COVID, and how can we document that and prove that's right?
Okay, so speaking of the shutdown rule, a lot of our clients and patients did not want to be seen because they were scared of my employees or nurses bringing COVID into their homes. So the number of visits, which equates to revenue, actually went down. But yeah, so I guess I'd probably need to talk to you offline about it.
Yeah, Angela, if you want to fill out the questionnaire and
I will.
Okay, and then we can reach out to you directly. That would be
Great. Thank
fantastic.
you, Yuko.
And then, thank you, Angela. And then Yuko, we had one question about clarifying that you have 3 years to file ERC.
Yes, so it's 3 years from the date you filed the original tax return. So this is a payroll tax return. So the first quarter you could potentially qualify is 2020 second quarter, and second quarter 2020 payroll tax return was probably filed about mid-July to end of July. So you have like July 2023 to file amended return.
But the recommendation would probably be to do it as soon as possible.
Yes.
So one more question, Yuko. So if my fiscal year ends in September, right? So we haven't filed the last year's fiscal year's tax return.
Yep.
So this is a good time to try and do an ERC for the whole last year.
So it's not income taxes, Deb. So it's gonna be related to payroll taxes, but we'll recommend like, if you think you're gonna qualify for ERC, like, start looking at it and like, process the amended return so you can get in line of like, in with like IRS. Just to know, like right now, it's taking about 9 more than 9 months to process amended return for by IRS. So we file many claims beginning of January 2021, and now we are seeing IRS acting on those.
So you're saying you're gonna do it quarter by quarter? Is that what you're saying? So,
Correct.
and you can go back retroactively up to 3 years, is it?
Mm-hmm.
But it's not an amended tax return. It's just a separate ERC filing, and you just do it quarter by quarter.
So it's gonna be an amended payroll tax return, not income tax returns.
Oh, I see. So, but if I've been doing payroll processing through QuickBooks or something else, you have to go tell them to file and all that stuff, or you will file the amended, or?
No, we will prepare so if you use QuickBooks or any payroll services, they are automatically probably filing your payroll tax returns.
Yeah.
So if you have a copy of that, we will prepare that amended 941, which is payroll tax returns, and then we will send it to you for signature, and we will just send it to the IRS.
But how, so if you don't know for 9 months, how do you file your tax returns for this year? Do you have to just pay it, or?
Well, what do you mean by that, David?
So I'm a little confused. So let's say you file this amended payroll tax return that gives you X dollars in tax credits, correct? Or is it a payroll tax credit? I don't know what, is it a corporate tax credit at that point, or?
It's a payroll, it's actually a refund against payroll taxes.
I see. And it comes back to the company.
Correct.
Okay, but that does not change the income tax for the company, right? Is that correct?
So when you receive the tax refund, you may have to, so there's, I think the IRS is still coming up with the guideline, but if they don't waive it, you have to include ERC refund as an income item.
So now you have to go and pay additional income tax on that previous filing then.
Yeah.
Wow, it gets all circular, huh? It's very,
I know, right?
oh gosh. Definitely need a pro like you to help. All right.
Do we have
sign off?
Sorry, Div.
Thank you. Okay, I'm going to sign off. Thank you very much. We'll talk later. Okay.
Thank you, Deb.
Yeah.
One of the things I wanted to just quickly mention with the questionnaire, it's or the high level analysis is very, very simple. We're asking for, 3 key pieces of information: gross receipt comparisons from 2019 to 2020 to 2021, payroll amounts and employee counts, PPP information, and then gross, I mentioned that, gross receipts. So very, very high level. And then if you fill that out, we will reach out, and then we will deep dive into your specific situation case by case. Any other questions? All right. Well, thank you everyone for joining.
Thank you, guys.
Thanks,
Thank
Yuko. You
you.
did awesome.
Thank you, Yuko. Bye.
Thank you.
Say bye. I want to say
A young tax preparer.
That's cute.
That's so cute.
Have a great day.
Thank you.